And look, Americans are currently sitting on $17 trillion in home equity. That is trillion with a T. That is more than the GDP of China. That is enough money to buy the Los Angeles Raiders 1,700 times. Though why would you want to do that is a question for a therapist, not a financial advisor. But here's the uncomfortable reality. You think that equity is in a vault somewhere. You think it's behind a steel door at the county guarded by a stern woman named Gladys. It's not. Your equity is effectively sitting on a folding table in a crowded room, and the people tasked with guarding it, the county recorders, are legally required to let almost anyone walk up and touch it. We are seeing a massive spike in deed fraud, creditor aggression, and liability lawsuits. The vultures are circling because they know you have the money, and they know you don't know how to protect it. So to stop you from becoming a statistic, I'm going to show you 9 creative ways homeowners are quietly protecting their equity. And I'm structuring this into 3 specific categories. In this first category, I'm going to give you the locked-in protections. These are the moves that are completely legal, totally obvious, and yet 90% of you aren't doing them because you think the bank did it for you. Well, they didn't. Then in the second category, we move into the structural shields. This is where things can get a little messy. These are the strategies where we use the bureaucracy's own laziness against itself. And then the final category, this is the ghost protocol. These are the aggressive strategies that feel like something out of a spy novel. These are for the people who don't just want to be safe, they want to be invisible. Now, before we jump in, do me a favor, pause the video for just a second, drop a comment, and tell me, what is the biggest threat to your home right now? What do you think it is? Is it the market crashing? Is it, I don't know, property taxes? Is it a lawsuit? Put it in the comments. I want to see if we cover it. All right, so let's get into the receipts. Category 1, this is the locked-in reality. This is the stuff you should have done yesterday. So number 1 is the inflation hedge, the do-nothing strategy. Although it's the most boring, it could be the most effective strategy on this list, simply refusing to sell. Now, people think this is just about inventory shortages or being stubborn. It's not. It is interest rate arbitrage. If you are one of the lucky souls holding a 3% mortgage or better while inflation is running hot, you are currently pulling off a legal heist. You see, every month you pay that mortgage with inflated dollars, the real value of your debt goes down. It is the only time in financial history where the bank is effectively paying you to borrow their money. It's like you're burning the candle of your debt from both ends. The wax, or the debt in this case, it disappears much faster when the flame is coming from this side and this side. So when realtors call you begging you to list, remember, you aren't just living in a house. You are operating a hedge fund against the Federal Reserve. Number 2, the umbrella force field. Talking about umbrella insurance, to clarify. People think umbrella insurance, it's for guys who wear monocles and own yachts named the tax write-off. Wrong. It is for the middle-class people with equity. Because here's the math. If a delivery driver slips on your icy driveway and sues you for $1.5 million, your standard homeowner's policy covers maybe 300 grand. Well, guess where the other 1.2 million comes from? Yeah, your living room. For about $200 a year, less than the cost of a bad coffee habit, you can stick a $1 million policy on top of your house. It's not about insurance though. It's about buying a cheap firewall so you never have to liquidate your kitchen to pay a judge. Number 3, the bankruptcy block, your homestead exemption. And people confuse this with a property tax break. They're totally different. This is a creditor block. In states like Florida or Texas, this protection is unlimited. In Nevada, it protects over $600,000. By filing one simple piece of paper with the county, you are legally designating your equity as off limits to general creditors. If you get sued for credit card debt or medical bills, they can take your cash, they can take your car, but they literally cannot force the sale of your home. It is a get out of homeless free card, and it usually costs about $50 to file, so do it. Now, category 2, the structural shift. This is the territory where we use the system against itself. So number 4, the digital watchdog, free county recording notification services. People think title theft is high-tech hacking. It's not. It's bureaucratic apathy. Criminals can file a fake deed electronically from an internet cafe in a non-extradition country. The county recorder's office is legally required to record it. They don't check IDs. They are basically librarians for land. So homeowners are signing up for free alerts, like the fraud sleuth in Denver or the notification service in Clark County. It doesn't stop the crime, but it acts like a tripwire. You get an email the second a document is recorded against your name, and it gives you a head start before the scammers can take out a loan on your house. Now, number 5, the post-policy upgrade. Upgrading to the ALTA homeowners policy. You see, most people think title insurance covers their ownership. It actually just covers the past, not the future. Standard policies protect against things that happened before you bought the house. But if someone forges a deed after you close, a standard policy often says, good luck with that. You want the ALTA homeowners policy or specific forgery endorsements. You see, this shifts the risk of future fraud from your bank account back to the insurance company. And trust me, they've got better lawyers than we do. Number 6, the spousal wall. Retitling as tenancy by entirety. This isn't just joint tenancy. This is legal indivisibility. You see, if you live in one of the 25 states that allow this, it treats a married couple as one single legal entity. If the husband gets sued for a business deal gone wrong, the creditor cannot touch the house because the husband doesn't own it. The marriage does. It effectively zeroes out your equity for individual creditors. No trust required either, just the right words on the deed. It's like a marriage vow, but with better asset protection. Now, category 3, this is the ghost protocol, the aggressive stuff. So number 7 on our list, the weaponized HELOC, the strategic home equity line of credit. You see, people think HELOCs are for kitchen renovations. Smart investors use them for equity stripping. When a lawyer is deciding whether to sue you, they run an asset search. If they see a $500,000 house with a $400,000 lien against it, you look broke on paper. They don't know that the $400,000 lien is just an empty line of credit you haven't used. They just see encumbered asset. It's a legitimate strategy to make your equity look smaller than it is, reducing the incentive for anyone to come after it. It's camouflage for your net worth, not to mention a liquidity safety net in the event of an emergency. I set mine up at houserichcashready.com. Go check them out. Number 8, the retainer democratization, the rich guy's legal loophole. You see, this isn't about legal insurance. It's about the ROI of a letterhead. Because if you call a contractor who ripped you off, they will ignore you. If you send a letter on Smith & Wesson law firm letterhead, they pick up on the first ring. So for a monthly subscription, less than the price of a tank of gas, you get access to attorney-drafted letters and legit legal counsel. It signals to scammers, creditors, and disputes that the cost of conflict just went up. You are democratizing the kind of legal bullying that rich people have used for decades. So look into it at bullyproofmylife.com. I mean, at the very least, it's sleep well at night type peace of mind. And finally, number 9, the ultimate flex, the invisibility cloak. And that's what you are when you hold title in an anonymous LLC or land trust. You're invisible. If they can't find your equity, they can't take it. Now, many people think that this is tax evasion. It's actually about friction. Because there's 4 states, Wyoming, Delaware, Nevada, and New Mexico. They allow you to form LLCs where the owner's name is not on the public record. And you don't have to live in those states to do it. So if a predator types your name into the county database, your house doesn't show up. Now, you're not hiding from the government. The government knows who you are. You are hiding from the public search bar. You are making it so difficult, so expensive, and so annoying to find your assets that the predator moves on to easier prey. But here's the catch. Invisibility is great defense, but sometimes you have to play offense because eventually someone, an HOA with a God complex, a contractor who took your deposit and ghosted you, or a debt collector ignoring the law is going to knock on your door anyway. And they are banking on one specific thing, that you are too polite or too broke to call a lawyer. They think that they can bury you in paperwork because they know you can't afford $500 to fight back. That is why I pulled this video out for you right here. I break down exactly how to put a legal force field around your life so that you can hand those headaches off to a law firm on retainer for less than the price of dinner at McDonald's for 2. You'll see how one letter on actual letterhead shuts down a bully faster than 10 angry phone calls ever could. Watch this.